This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a favor, if you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. We are now 2 months away from the Planet MicroCap Showcase Vancouver in association with Small Cap Discoveries, happening September 25 and 26, 2024 at the Fairmont Waterfront, Vancouver. And we have announced the initial presenting companies, speakers, and sponsors that will be in attendance. We got Paul Andriola and Brent Todd ready to share their latest insights and what I'd arguably say is one of the best lineups ever put together for a microcap investor conference on the presenting company side. Don't wait. You can register to attend at planetmicrocapshowcase.com. See you in Vancouver. My guests on the show today are Maj Soueidan, founder and editor, and Jan Svenda, senior equity analyst at Geoinvesting. Even though it's been a week to remember in politics, it's also potentially a week to remember in small microcap land. Both the IWC, the iShares MicroCap ETF, and Russell 2000 ETF are up about 10 to 11% in July, causing small and microcap Twitter X to declare, "We are back." Maybe we are, maybe we're not. But Maj, Jan, and I discussed the most recent breakout. We also discuss opportunities in aerospace, how there's info arbitrage opportunities everywhere, and more. We discuss a number of stocks during our interview today. Maj and Jan also may or may not own companies that comprise their Tier 1 quality microcap index. Please see MS MicroCaps and Geoinvesting for full disclosure. Thank you again for tuning into the Planet MicroCap Podcast, and please enjoy my conversation with Maj Soueidan and Jan Svenda. Maj, Jan, good to see you guys. How you doing?
How you doing, Robert?
Oh, good. We're recording this. Look, this is it's been a week, right? I mean, geez. Of course, we picked this week to be the week that where microcaps, small caps in general have pretty decent week. But I mean, under normal circumstances, it would probably be go overlooked. But seeing as how this has been the biggest week in American politics in our lifetimes in the last 50, 60 years, it definitely got overlooked. So, our emergency pod today is, are small caps back? No, I'm just kidding. We're not going to do that. but I figured, we should all jump on. We're not going to talk. This might be the only pod that anybody's listening to this week that we're probably not going to be talking politics. So we just want to kind of talk all things what's been happening recently, maybe some of the reasons for why in the last week. I mean, Maj, you've been saying this, you've been pounding the pavement for weeks of like, all right, we think this is the beginning of a potential bull market for small microcaps. That's not to say 1 week of performance is now the justification. Like, here we go. Like, not saying that, but figure we might as well cover it, see what happened, some of the reasons for why, and go from there. So I say that initial opening intro rambling, I'll leave it there. Maj, you want to take it away?
Yeah, man, thanks. Yeah, so I think one thing to point out too, though, is like there's been a bull market going on already, and underneath the Russell and the iShares anyway, right? Since 2022, second or third quarter. So the Russell. We don't really look at the Russell so much over here. We don't measure ourselves against the Russell, because the Russell, has first of all, these aren't really true microcap indexes, and I think we talked about before. There's a lot of companies in the Russell losing money. It's not really a true barometer of the quality that's going on right now, right? But eventually, when you look at the historicals, you look at the relative valuation of the Russell to the big guys, and you have to have a balance. So the question everyone's asking is a technical balance, is it a real balance? Yeah, I'm really not too concerned about that. We're just keeping our nose to the ground here, and like, hey, we're just trying to find these quality companies going through multi-bagger kind of hitting multi-bagger markets to create our own index. But what I will find interesting here as we track this, remember we had at the end of 2023, we had a big rally in the Russell, and that kind of eventually kind of faded a lot throughout 24. And now he has a big jump again. I hate those kind of big jumps. I'd rather have gradual kind of increase, because when you have these big moves, you get maybe the similar types of retractions too. And there's this, I guess, feeling that, if we do lower rates here coming up because of the favorable, I think, CPI data that came out, that'll be good for small caps. And my worry is that rates come down low enough to where we're back to speculation again and risk on, where everyone starts buying these shitty companies, pump and dumps, biotechs come back into play, and PEs matter less, price of sales matter more, growth on the revenue matters more than income. I don't think that's going to happen, but that's what the money's all got to go somewhere, right? So, but I don't think that'll happen. I think that the quality mantra is here to stay. I don't think rates are going to get down low enough to where it gets to that point again. But it will be interesting to see how this plays out. And I still think that, the zombie companies, those that are losing a ton of money, 5, 10, 50 million a quarter, these kind of bounces are going to be opportunities to short them, actually. We actually have a short index that we track internally to track these companies. And we're watching that closely. And that, I think that story still plays out as long as rates are reasonably, at a reasonable level. But it is good. I mean, when you have this kind of excitement about small caps, it's good for us. It's good for the nanos and the microcaps that we kind of follow here. And the good news was that even as the small cap index went up, the microcap index that we managed still went up also, which was good. We hit a high of 55% average return across 95 stocks. So we keep hitting highs. We have some more multi-baggers we hit during the month, which was great. I think we're at a 34. Every third stock right now our index is basically has hit a multi-bagger at some point. So that is really, really cool. My goal is to get the index to where we're in that 40 to 50% range of multi-baggers that eventually reach that status in the index. So that's pretty cool. But year to date, our index right now is up 23. As of the 19th, was up 23.51%. Still well ahead of the IWC of 7.8%, which shows that stock picking is working when you try and look at quality. And I want to say this too, Robert. We talk about quality here a lot, and but when you're investing in nano caps, there's a point in time where almost everybody's company was probably maybe lower quality or had some issues, even though it was high quality. So when you hear me talk about quality, I don't mean these have to be pristine companies. We have 10 points of quality we look at, and we're looking for the company to be able to at least attain those over time. It's almost better to find these stocks before they have that quality type of until they're hitting all the markers. But we do want to find companies that have the potential to be that kind of company. Because this what's unique about this index also is that even we call it the quality index, MS quality index. We are also looking for high probability turnarounds. So they could be lower quality companies, but we think are higher probability. And we're seeing it makes the index a lot of fun. So you get a flavor of quality companies that are undervalued, reaching inflection points of growth, plus high probability turnarounds that are also maybe at some stage in the turnaround where we want to start monitoring it. And that to me is going to trump the Russell and the MicroCap ETF, in any kind of market really. So our goal is to outpace the indexes when the market's going up and not fall as much when they're going down. We'll see if that plays out when we get a bad correction. Now we will go down, and when you have 95 stocks, it's going to be tough to basically, I think, have a divergence unless there's a really secular shift in small cap versus large cap, whatever.
Well, also, I mean, look, you did a good job there also, and like kind of also say, give yourself a disclaimer as well, and saying, look, we're trying to find stocks that have quality aspects, but also we think will be higher quality even more down the road, right?
Right.
So at the end of the day, and look, that's the nature of indices, right? Like they go up, they go down. You can't expect them always to, I mean, on aggregate, you'd like to see them go up forever, of course, but,
Right.
but, especially with how you guys are setting things up, like, but we're saying I think also it's like we're saying all this to say, because I mean, the index has returned, as you have here, 55% since February 2022. Year to date, it's up, well outperforming the IWC. Some of the ones within the index will for sure, not be as high performance as the others. I mean, you have, and that's just the nature of small, micro, and nano cap investing.
We are gonna prune the index a little bit here. What we wanted to do was to see how this index would do without any manipulation in it, like not putting our hands in it, and see what would happen. And 70% of the stocks are up, which is good. So now it's time. Okay, well, maybe we can do some pruning once in a while when we think their stocks don't really qualify at all anymore, and we'll take them out. But we're being very, very careful about that, because we don't want to. If it ain't broke, don't fix it, right? So, and the reason we would move a stock from the index would not be valuation. It would mainly be if they're missing on quality factors, because valuation change. So we don't mind having a stock in the index that gets overvalued, and then we want to watch for when it comes down eventually, maybe to buy it on a pullback. So the index gives us a frame of reference to monitor these stocks and ignore everything else that's out there. It's really helped us become focused on this stuff. Another thing we can talk about too, Bobby, is like the acquired stocks. And you're seeing all this play out. So the returns is one thing, right? 34% multi-bagger hit rate, beating the indexes, quality turnarounds. Now you're also starting to see these companies already get acquired. And that's what happens. Quality companies that grow get acquired. And so far now we had 6 that got acquired in the index over 2 years and some change. And then we have a 7th one right now, that SGRP, that might get acquired.
Or they're just high quality and their price has been beaten down so bad to the point where, a strategic or PE sees,
sure,
like, oh, hey, this is a good one. It's trading at valuations we like. Let's go. Yeah.
It's a price you pay, right? I mean, and you'll get that in the index. We assume some of our turnaround companies might be in that situation like you're talking about. Might be beating up stocks that get acquired. Maybe not at the best price we would want it, but still at a premium because they're trading so low of valuation and handicapped. So that's what we're proud of. Our last one was 2 weeks ago, which was a Canadian company, Hero, I think is how you pronounce it. HRX in Canada, and then HERXF on the OTC. This was actually cool because something we've started doing with the index right now to make it more manageable and consumable is we've created a spotlight stock series. We don't say once a month or whatever. Whenever we find a stock in the end we like, we make it a spotlight stock. It just so happens that we've been able to do one every month for the last 4 months. And HERXF was the last one we just did, and I think it was June, Jan, right? Was it the June pick? Yeah.
Yeah, it was June. Yeah, it was June.
And it was already in a cliff note. It was already up about 20-30%, and it ended up being up 80% at the end here being acquired. So that was a top 5 aerospace play. It was, and this is, I don't even think this was a microcap. Was that more of a small cap, Jan? I think.
Yeah. The market cap was pretty large. Yeah.
That's why I want to tell you too, Bobby, that this index gives us the latitude to add some more liquid, maybe mid cap to small cap stocks once in a while. It's not a big part of what we do, but it just diversification allows us to have some fun with that.
Yep, that's for sure. That is for sure. Yeah, we just it's with these Canadian stocks, man, they just keep getting scooped up, dude. Look, you saw the Hamilton Thorne one this morning too. That one just got
Yeah, yeah.
acquired. I mean, it's just,
No, I
geez,
think what you're saying, what's really
not a
cool too,
shareholder. No.
there's so many, people that like there's some people in my Cliff Note index that won't buy Canada stocks. And I used to be that person, years ago because I associated with mining, pump and dumps. But I gotta be honest with you, man.
No, Canadian. I said Canadian, not cannabis.
I know, yeah, Canadian for
Yeah,
sure.
I think it's
Canadian,
cannabis.
well, that's it. I went up. I went to Canada. I get it every time.
Same difference. I remember those
Well,
conversations.
yeah, people thought that. Yeah,
I remember those conversations we had like 3-4 years ago. And I remember talking about like, dude, have you kind of looked at some of this stuff? And like, I know you're friends with all the same people I am, like, and you're like, I don't know, there's so much. I'm still just looking at US. And now, man, I mean,
there might be. I mean, I might go on a limb. There might be more quality in Canada. There might be.
so that's why you have to come to Vancouver.
Yeah, we'll see. Gotta get my Puerto Rico days in.
Oh, yeah.
My third year, I can't.
It's a quick trip, dude.
Can't bail now.
It's a quick trip for you. Come on.
I've been known to maybe spontaneous. You know me, so
I know.
I just don't want to commit to it just yet. But there's a chance I'll be out there.
Good stuff.
Cliffhanger, man.
Yeah, I love it. So, I mean, anything else we missed? I mean, you kind of got into it a little bit, and we'll get into the new spotlight and all that kind of stuff. But real quick, for those that are like, wait, I mean, yeah, you've been pounding the pavement that, small cap micro now. Yeah, we've been in this bull market or on for stock pickers, but from a data perspective, last week was like, oh, well, here's a potential inflection point. For those that passively follow small micro nano caps, what are some of the data points that you were looking at even prior to that others can also look at and say, oh, let me follow this to see when this breakout does actually happen and maybe some reasons why?
Yeah, I mean, yeah, that's tough, man, because really, to answer your question, frankly, we just track our index to do that. And so if I don't really, I'm not really a data point guy in terms of macro and micro and looking at those things, right?
You don't look at the yield curves and
No, that's not.
that's not your shout out to your run. I think it was your run that I saw.
I just think the thing that I would be really, I wouldn't get too caught up in it, to tell you the truth. I wouldn't get too caught up in it. Is our small caps back? I would just get caught. I mean, I think they are back, right? They've been back. If you're looking in the right area, I would just really try to understand they are back, quality is back, and that's where I would keep my head down and doing the research and finding stocks like that. Not trying to really ask myself, are they back yet? Because the thing is, the index is going to do what the index is going to do. And the key is you want to be in the market when this stuff happens. So, if you were not invested in any of the market, you missed a huge rally there. If you're one of those people who can time the market, great to you, kudos to you, right? But one thing I'm watching though, Bobby, is what you want to. I think maybe this is something to watch actually. If we can get these big caps to break, if you start seeing that happen, that would be really, really nice to start, because the valuation discrepancy between some of these smaller and larger companies, eventually you want to hope that eventually people say, okay, now I can't invest in a CrowdStrike trading at like 30 times revenue and a 500 fucking PE, and it's just the price perfection and order perfection. You got to hope that one day you have that rotation. So what spawned the GARP microcap nanocap rally that started in 2022 was the breakdown of some of these big cap companies like Ring Central. These all come down to earth. So you had this first stage of everyone just selling everything, money coming out, and then it has to get reinvested. And it came back into a lot of it came back into the GARP. Now, look, the big caps went up too, right? I mean, you have the video go up. You've had the Facebook and Netflix, all of that. I'm not saying that hasn't happened, but some of that money isn't going back into the shitty companies. So there's left more money for the microcaps. So I would be interested to see like what's going to happen next going forward. Are some of these companies that are trading at crazy valuations in the big cap are going to come down? Is that going to break? That I'll be looking at. But I just focus on really just trying to find great companies that are undervalued. I mean, it's boring, Bobby, right? It's the thing.
No, look, I'm just trying to make sure people aren't confused when we say, you know, we look for quality, but then money flows back into shitty companies, you know. So that is my whole goal, is that we want to make sure that it's a distinction, you know, that there's quality
Sure.
small micro, and then there's also shitty small micro.
Of course.
Legit.
One thing I would be doing right now, if I was really had time, and what we are doing it is, because there was this kind of, I don't want to call it out of favor, but the small caps took a breather this year until that big rally. And the microcap market for the last 2 months was getting pretty boring. And you saw a lot of sharp pullbacks in some stocks. And even the Russell move, a lot of micros didn't participate in that rally as much as they thought they would have, because it was really a Russell kind of move. So I'd be looking right now at the conference call transcripts from prior quarter and trying to find out what stocks fell in microcap land that has some really great stories that shouldn't have gone down. And they're probably going to report some pretty good quarters and maybe bounce up pretty quickly. So that's what we're doing now, because we're taking advantage of that market weakness in the last 2 months in the microcaps to find some of those companies.
Got it. All right, now before we go to the new spotlight stock that have you officially added it to the index, or?
Yeah, which brings my point. This is one of those actually. Yeah.
Okay. Just, before we get there, real quick, you mentioned CrowdStrike, Nvidia, Facebook, Netflix, SGRP. Just give me my disclaimer.
No, I don't own it. I don't own any of them.
Okay, cool.
Me neither.
SGRP. Oh, you own SGRP?
Yeah, sure. Yeah.
Okay. Yeah. But I have to go back and check SGRP, but I'm pretty sure, and I'll let you know after the show, but I'm pretty sure I don't own that one anymore. Yeah. So, I mean, I don't think I have, sometimes I'll keep a few shares to have it, but I don't think I do that. Yeah.
Gotcha. Okay. All right. New spotlight stock. Talk to me. What's going on here?
Yeah. So we just dropped this. It's been in the index, and this is a good example of what we just talked about earlier before, where stock came down on its last quarterly report based on a one-time event. But if you read the conference call transcripts, you understand it was a one-time event. And they're going to come out with their earnings, I think, anytime now. And we believe that it's going to be a killer. We don't know exactly if it's going to be this quarter, next quarter, but we think this company, for example, selling, I'm not going to symbol yet, Bobby. It's because it's pretty illiquid.
So what, we're going to talk 15 minutes about it? You're not even going to give me the symbol?
I'm going to talk 30 seconds about it.
Okay.
But it's basically, it's a cool, if you went back and look at the transcript and the backlog and understand that margins are going to go from 30% to 50%. That the last quarter loss snafu was temporary. You got a stock selling under $10 that could do $2 a share in earnings, and that trend that could start like right now. And so that's what we're looking at for this particular cliff note. But the reason I really wanted to talk about, really bring this up more so than the symbol, Bobby, was that it's the research, the information arbitrage everywhere. Like you can go read the filing. It says, hey, we're going to convert 75% of our backlog in the next 12 months. Boom. We're going to increase our gross margins from 30% to 50%. Right. You got some data points here that you don't have in the press release, right? So you can do a pretty easy calculation. So the backlog has higher margin revenue. You might not know when that 50% thing's going to hit the margins, but it's going to go towards that. So we can give ourselves some ideas of not doing any complicated model of, okay, well, $1.28 on last quarter's backlog of earnings per share, maybe $1.82 on the updated backlog, and that's what we're gonna get, right? So you can start putting price targets on it if you want, short term. But so this is we're really excited about this one potentially here. I took a little risk of putting it in before the earnings, but you can see here that this is our fourth spotlight. We had three before. The one got acquired, and the average returns about 35%. And we just launched a spotlight in April, so we're pretty happy with trying to make the 4 for 4 here.
What were the other? Okay, so you said one of them because they just recently got bought out. What are the other two?
Oh, the other two. Yeah, that's not the problem talking about them because they got FitLife, FTLF, which was in my starting five conference,
Right.
and then the other one was FACO, which is a substandard auto insurance company. Both up nicely.
Very cool.
We still think they have upside. One thing we're trying to do right now, really, for the index is really only make a stock a spotlight if we think it has at least 100% upside in the short term. I say 50 to 100%, but inside I'm saying 100%, and a multi-bagger potential long term. That's kind of my. And yes, I do own those two stocks, by the way, Bobby. FACO and FitLife.
Sounds good. All right. So, real quick, do you own FitLife or FACO?
Yes.
Okay, good. And Jan, same?
Yep.
Cool. All right. Oh, aerospace.
Yeah.
One thing we like
is the aerospace sector right now. And our index said, H that's got acquired, and we got two more we're looking at in the index that are in the index right now that are.
Well, tell me why is aerospace interesting right now?
There's if you look at some of the trends, and you get a lot of this information, man, from like reading their transcripts and press releases. Well, you'll hear Buffett say, read. Well, you can read books, but you can read annual reports all day long too, which he does also and says you should do. But my reading kind of preference is reading those boring reports and all day long, and you actually learn a lot from them. You start learning about industry.
See, Maj is that guy on the beach where, look, most people bring a book. He has just printouts of 10Ks and everyone's like, what is he? Like, no, that's actually this is his pleasure reading.
But so during COVID, you had this kind of, obviously, as you would imagine, this pullback in airplane manufacturing, right, and aerospace activity. So now we've gone through COVID, all that backlog now is coming in, and you have this 8 to 10 year kind of visibility in backlog by the major, companies like Boeing and Airbus and those guys. So there's this huge cycle now of really demand for all parts of the aerospace chain. So we like that. I'll tell you that I think that the other ones there are TATT, which I don't think I own that right now. And the other one is FTG, which I own a little bit of that, I think. That's Canadian. They're the two other ones that we're following in the index right now. I wasn't going to reveal them, but I can, for you, Bobby, do it.
You're killing me.
And they already are up, so that's fine.
Okay.
132% and 45% respectively there. So
because they're illiquid. That's gonna be Maj's new nicknames. Maj Illiquid Soueidan. Yeah. Jan's trying not to laugh super hard. He's like, it's so true. All right, dude. Sorry. Oh,
and I wanted to highlight this one, Bobby, because United Guardian, for a few reasons. First, it shows that these smaller companies can pay dividends, right? And another reason, I want to talk about this company, by the way, this personal care products, pharma products, really in that area. And through all my years in interviewing management teams and what I've learned where a lot of mistakes occur, a lot of it's just around marketing, sales and marketing, and unable to scale because of the wrong channel partner. So the reason I'm following UG, and it's actually done well now, I think it broke out kind of last 2 weeks, up 30% now in the index. Actually, it's new high today as we're talking, over 12. When you read the 10K, you just got that whole wonderful explanation. Our marketing was the issue. So they basically put it, these are usually like these tier one quality companies that we have in the index are usually been around for a long time. So usually have some market presence, some respect in the market. They just need to find a way to catalyze growth, right? And in this case, what they did was they changed their market strategy a little bit, which I don't understand everything about changing because I haven't talked to the company. But what caught me, my attention more was this. They had this long-standing distribution partner that they decided, and a lot of times you create these relationships and you don't want to sever them because you have a relationship, right? But they decided eventually, hey, we have to sever this relationship. Not sever it, but it won't be as exclusive anymore. And now they're finding new distribution partners to help them sell their products around the world. So that little tweak, I like hearing those tweaks in marketing distribution from companies that are already successful, but that just aren't growing yet, which just tells me they need a little bit of a better plan to scale the business. And that's why I'm watching UG. I wouldn't say I'm excited about it. They've had a couple of good quarters now in a row, but I don't know enough about it to understand if I'm getting excited about it yet. But
so just watching, not a shareholder.
Correct. I think I used to own a little bit. I don't think I own any anymore.
Got it.
But if you look at if you look at a lot of companies that it's really overwhelmingly, and it makes sense, right? I mean, selling and scaling is not easy, and a lot of these, I particularly like the companies where they've made a mistake in the sales and marketing process. They recognize that and have changed and are having success. They won't make that mistake again, hopefully.
Absolutely, for sure. All right, so we got UG. All right, what else do we need to cover this week? I think
that's it on my end, man.
We've covered a lot. I mean, I was going to talk lumpiness, but honestly, like let's save that for the next one because there was a lot that happened last week, and I think people are, I wanted to keep this one relatively short because I think we're all still trying to figure out what what we're going to do with our lives now or what's going on with
right.
just between the what was it the Microsoft crash on Friday and the convention last week and the Biden stepping down. It's a lot going on. So I think we'll keep it chill. We'll end there on this. We'll do another one, hopefully either next week or the week after, where we could talk on lumpiness or there's a whole host of other things. I'm in the middle of rebalancing our index right now, so hopefully we can have some more data on that and compare it to kind of the stock pickers index and see how everything's going. And I think that's pretty much all I got. So Maj, Jan, where can people go and find more information on you guys? Subscribe, the whole bit.
So on Twitter, you can go at Maj Geoinvesting. You can also find Geo at Geoinvesting, and then MS MicroCaps on Twitter also. We have a Substack, MS Cliff Notes on Substack, and then of course geoinvesting.com.
Nice. Jan?
For me, it's just the Twitter with my name, as per usual. Very easy.
Beautiful. And do you own UG or any of the other stocks that I mentioned?
UG, I don't. And what were the other ones? I think I mentioned the disclaimer.
Oh yeah, you said no. Yeah.
Yeah, I did. Don't. No. These no.
You did good. See, you remember your portfolio, unlike other people that might still be on this call. Anyways, dudes, always a pleasure. Really appreciate it. Good luck. Stay safe, and I'll see you at the next one.
All right. Thanks.